In today's video, I'm going to be sharing with you how I got qualified for a mortgage at 21 years old and how you can do it too. What's going on, everyone? My name is Bailey Kramer and welcome back to my channel where we talk all things real estate investing. So I just got pre-approved for a mortgage on an investment property that I'm looking to purchase, and honestly, I am shocked. Absolutely blown away. Not to flex here, but I don't have a job, I don't have any tax returns, and my credit score is decent. In this video, I'll be sharing the full story of how it all went down. And make sure you stay till the end because I'll be sharing the exact terms and interest rate that I received. I'll also be sharing tips on how you can qualify for this mortgage too. The property that I was interested in purchasing is right outside Asheville, North Carolina. It's a beautiful city with year-round attractions and so many things to do. There's endless amount of hiking, tons of breweries, historic museums like the Biltmore Estates, and it's only an hour drive from major cities like Gatlinburg, Tennessee. A buddy of mine has a property just a mile down the road from this one, so I know it can make a great Airbnb. I found this property on market, and after talking to the realtor, I realized that I could not buy this property how I typically do, which is using seller financing. If you're new to the concept of seller financing, I made a video outlining the ins and outs of it, and I put a link to it in the description below. Even though I couldn't do seller financing on this property, I was still super motivated because the numbers are incredible. It's a 3-bed, 3-bathroom house with a ton of space downstairs to add a 4th bedroom by just creating a wall and adding a door. If we added the 4th bedroom, the income potential on this property alone would increase by $30,000 annually. I use a website called AIRDNA to help me estimate the revenue potential of short-term rental properties. If you're interested in checking out AIRDNA, I left a link to them in the description below. So as you can see, AIRDNA suggests that this property, 3 bedrooms, 3 bath, would pull in roughly $70,000 per year. But if we were able to add another bedroom like I mentioned earlier, the revenue potential would go from $70,000 to $98,000, which is absolutely insane. And with my experience with Airbnbs and talking to other experienced operators, the expense ratio is right about 50% for Airbnb properties. And that includes principal, interest, taxes, and insurance, and all other costs associated. So when I mentioned that the revenue potential was $70,000 or $98,000, depending on how many bedrooms, you could basically divide those numbers in half, and that's what we'd expect to net at the end of every single year. But the biggest factor in most real estate deals is the financing piece. And since I knew I couldn't do seller financing, I knew I'd have to go through a lender. I reached out to my network and asked if there's any lenders that could help me with my situation. And I ended up connecting with a lender, and his name is Michael. And here's what he told me. He said the best thing to do is apply for a no-doc mortgage. A no-doc mortgage is a special type of loan where they don't check your income or tax returns. Instead, they focus on your credit score and the deal itself. And for someone like me, that's perfect because I don't have 2 years tax returns or a W-2 job with strong income because I'm an entrepreneur and I'm also a student in college. So anyways, I filled out the form that Michael sent me, outlining my credit score, the address of the property, and a few other details. And within a couple of days, Michael sent me the official loan terms and a pre-approval letter. Here's what he came back with. He was able to score me a mortgage with a 30-year amortization, 25% down, at a 5.4% interest rate. You might be thinking, well, Bailey, 5.4% interest rate? That's not very good. People are getting in the 3% these days. While that is totally true, those people have great credit scores and a very stable job. Me, on the other hand, I have a decent credit score and I'm a student in college. So the fact that I'm able to score a 5.4% interest rate is absolutely incredible. Now, there are a few things about these mortgage terms that I'm not a big fan of. Like, there's a 5-year prepayment penalty, which basically means if I go get a new loan, I'm gonna be hit with a big fee. And the other part that I don't like is that they require 12 months of debt service to be held in an escrow account, which is kind of a bummer because that means we just have to raise more capital that we can't even use. These terms and contingencies aren't deal breakers, but they do make the deal a little less sweeter. But for those of you who are just starting out or who don't have a great resume to take to the bank, a no-doc loan could be an incredible option for you. I'll be posting more updates on this property and what I decide to do, so be sure to smash that subscribe button so you stay tuned, and follow me on all my socials so you can follow along. I'll see you all next time. Peace.